It's not unusual for people to apply for a bond before they get a pre-approval, and then you kind of need to deal with that awkward moment when the agent comes back, or maybe you get a message, right? Just to say that your bond has been declined. I don't know if this has ever happened to you, but I remember trying to buy a house, and the agent came back to me to tell me that my bond application has been declined. And I remember being so embarrassed because I was just like, this guy must just think I'm so irresponsible. So maybe you're watching this and you've already been declined, or maybe you just want to make sure that you never find yourself in this position. So over the next few minutes, I'm going to give you 13 reasons why the bank will decline your application. I'll show you what to do to make sure that this never happens to you. And if you already are in too deep, we'll look at how to remedy this before your next application. Make sure you stay till the end because the last 3 reasons are actually completely out of your control. So if this does happen to you, it's going to be a lot harder to rectify. But I promise you, I will give you options so that you can get your home loan. I'm Sibolelo Makwanyane, aka Sibolelo, the estate agent, and welcome to the channel where we make your bond application process that much easier, especially if you're a first-time home buyer. Make sure you've subscribed and click the notification bell so you can be updated whenever there's a new video loaded. In order to avoid a home loan decline, the best, simplest, easiest, most practical way is to get a pre-approval. It really is a very quick process. It'll save you time in the long run, and it'll also save you a lot of unnecessary stress in your home buying journey. You'll be able to know your credit score, and you'll also be able to know how much the bank is willing to give you so that by the time you go shopping, you know what you can and cannot afford. I've recorded a video all about pre-approvals. I'll add the link in the description. Your estate agent will be able to guide you in the right direction if you do want to get hold of a bond originator and you don't know how to go about that. I have recorded a video about bond originators, how they can help you, how they function, how the process works. You can check that out in another video. I'll add a link in the description below. But back to today's video. One of the main reasons why banks decline home loan applications is because of poor credit management. Sometimes we do a really bad job at paying our bills, and it's almost like we think we can just go and pay everybody off in a great big hurry before we buy our bonds, as though our previous transactions are going to get, wiped off or written off just like the balance. But unfortunately, all of our financial commitments are recorded at the bureaus, as well as how we manage those financial commitments. When you purchase your property, your credit score is retrieved and it shows transactions as far back as 2 years. If you are not diligent at keeping these commitments, then the lender sees you as a high risk. Because, if you cannot pay your phone bill or pay it on time, then according to the bank, you're more likely to default on your home loan repayments, which increases your chances of getting your bond declined. In order to avoid this one, really make an effort to pay your bills, pay at least the minimum amount due by or before the date that the money is required. Keeping a high credit score is probably one of the best decisions you can make for yourself if you ever intend to access credit. If you've already been declined, go back and pay your bills more diligently in order to increase your score, and then you can reapply on another property after a few months. Number 2 is low affordability. The bank will generally grant you a loan of no more than 30% of your gross income. So let's start there. 30% of your gross. Then the bank looks at your financial commitments. So this is credit cards, personal loans, car repayments, insurance, cell phone contracts. Then they factor things like normal living expenses, school fees, petrol, food, things like that. Once they take all of these factors into account, you should still be able to pay a bond of 10,000 Rand on a salary of 30,000. Just because you earn 30,000 Rand doesn't mean you automatically qualify for a bond repayment of 10,000 Rand a month. In order to avoid this decline, really draw up a detailed budget. And I promise you, if you do it correctly and you don't cheat, and honestly, cheating only just cheats yourself, but if you do it realistically, you'll probably find that you are within the perimeters of which the bank is willing to borrow you. More about budgeting in this video. Again, I'll add the link in the description. If you do get declined because of affordability, you need to lower your financial commitments. Or better yet, look at a lower price bracket in the purchase price when you put in your next application. The third one is high debt to income ratio. Now, that is basically the percentage of your income that goes towards debt. If a large chunk of your salary goes towards paying creditors, the bank sees that as a red flag. So say your income is 24,000 and your monthly repayments towards debt is 6,900 Rand. Then your debt to income ratio is 28.75%, which for the purposes of this video, we'll just call 29%. Ideally, you want to stay below 36%, but there are some lenders that are a little bit more strict and they will only accept 30% and below. I'm sure you can see how this can lead towards the bank declining your home loan. So in order to avoid a high debt to income ratio, then keep your debt as low as possible. If you're in a position where you've already been declined, then just try to pay off as much of your debt as you can before applying again. Number 4 is employment history. If you're constantly changing jobs and moving from employer to employer, you come across as being unstable, and the bank doesn't like unstable. If you've had a recent change when it comes to your position or the employer, that shouldn't be a problem. The catch comes in when there's a series of changes over a short period of time. That may lead to the bank declining your home loan application. Something else that the bank may find concerning is a recent drastic change in industries, because it might turn out that you don't like this new career, or maybe you struggle to keep up with what is expected of you. Either way, it becomes more of a risk for the bank, and the bank doesn't like risk, so you may find yourself seeing a decline in your home loan application here as well. Your best solution here is to wait until you've been in one career path for a decent amount of time. If you have already been declined, then just wait until there's more stability, then you can apply again. Number 5 also relates to your job. It's inconsistent income. If you're a freelancer or work overtime, anybody whose income fluctuates, basically, you are going to be asked to provide 6 months bank statements and pay slips, as opposed to just 3 months of the salaried employee. They add up your total 6 months income and then divide it by 6 in order to calculate your average monthly income. If you have a big amount coming in January, then you'll apply in June. Say the application process takes a little longer than expected. Then we run into the month of July, which means we're no longer considering the big January amount because we only start counting in February. Now, if January is the one that carries most of the financial weight, then this is going to decrease your average income over the 6 months. In order to avoid this one, apply when you've got a more stable list of pay slips over the 6-month period. If you're under 18, you're not going to qualify for a home loan because you are too young to get into a legal contract. Now, when it comes to the maximum age, it becomes a little more complex. Because a bond is generally registered for 20 to 30 years, if you're a salaried employee, ideally the bank wants you to have that bond paid up by as close to retirement as possible. The older you get, the more complex it becomes to access a loan for your property. Now, in order to avoid this one, the best way is to just get into home ownership as soon as you can. The next reason why your bond might be denied is because of lying on your application form. Trying to deceive the bank to get a home loan will definitely lead to a decline in your application. Here we're talking about somebody who is worried that they've been working for a short period, so they go and exaggerate their employment history. Fake or altered documents, or maybe you become a bit creative and optimistic when it comes to how much you earn. This will definitely lead to the bank declining your application. So here, just keep it clean and keep it honest. And then we move on to payday loans. A payday loan is basically a temporary loan that you take out on the grounds that you'll pay it back in full on your next payday. Hence the term payday loan. We might find ourselves in a position where we have an emergency or we have a temporary financial disruption that we need to take care of as soon as possible. The problem here is that it's registered on your credit record. And we're just thinking, well, it's a small amount and we'll pay it back ASAP. But payday loans have a very negative impact on your credit score, and the bank sees this as a major red flag when you're applying for your home loan. Take out enough of these loans and it becomes clear to the lender that you simply are living beyond your means and are just not ready to take out long-term debt. Hence, they may decline your application. The long-term effects of payday loans are simply not worth the temporary convenience. The best way to deal with this is to stay as far away from payday loans as you possibly can. Not just for the bond application, but also just, they charge an absurd amount of interest, and also they create a sense of dependency. Number 9 is too many credit applications. Every time you apply for a loan, or even just to see whether or not you will qualify for a credit card or a home loan, it is registered. Now, sometimes this is registered on your credit record, in which case we call it a hard check. If it isn't registered, we call it a soft check. Every time there's a hard check application made, it leaves behind a paper trail. And the bank has access to this when you apply for your home loan. If you have too many hard checks, it gives the impression to the bank that you are cash strapped or under financial pressure. And this, as you can imagine, is not a good reflection when you apply for your home loan. Do enough of these hard checks and it will decrease your credit score, meaning your home loan may be declined. In order to avoid this one, try not to do too many applications or inquiries. If you do want to know whether or not you will qualify for item X or particular Y, first ask the lender whether or not this application will be a hard check or a soft check. It's possible to have debt or a judgment in your name that has got nothing to do with your personal activities, be it a case of mistaken identity or identity theft, or maybe just a matter where you have paid off the debt, but it was never removed from the system. You might find you once had a credit card which you've since paid off and you thought you'd closed it, but it still sits on your credit record, and it is thus going to affect your affordability because it now counts as a financial commitment. If this amount is high enough, it will lead to your bond being declined. Or maybe there's a judgment that has got nothing to do with you, but as long as that judgment is in your name, the bank is going to decline your application. The best way to avoid this one is to regularly check your credit report, and just before you apply for a bond, it would be best to do a pre-approval because it will show you if there's anything on your report that needs to be fixed before you apply for the home loan. If you already found yourself in this position of a misunderstanding, you should be able to be sorted out by just getting a paid up letter from the lender or getting the lender to fix whatever mistake is on the report. Depending on the problem and the speed of the lender, this may take a few days to a few weeks, but there are times where it takes a couple of months to rectify the problem. So that's the first reason that is completely out of your control, an incorrect record. The second factor that you can't control either is the valuation of the property. Before the bank grants you the final approval, they will first need to evaluate the house. Now, say you're taking out 100% bond on a property of 1.1 million. Basically, the lender is borrowing you money based on the value of the home. If they assess the property and find that they say it's only worth, let's say, 1 million, they're not going to borrow you the full amount that you're asking for. In a case like this one, you can either come up with 100,000 rand yourself and then get the bank to finance 1 million, so they only invest it for 1 million rand. Or you could try and have a conversation with the agent and the seller and see if there can't be some kind of an agreement which might include lowering the price. The other factor completely out of your control is knowing how much the bank has invested in one particular area. Every lender has a certain limit when it comes to how much they're willing to invest in one specific area. It's called exposure. Let's use the example of a complex. Say you've got 60 units in one complex and Bank A finances 50 of those units. Now, if it should happen that, anything goes wrong with the complex in any way, then Bank A is going to lose a lot of money, and the bank is not in the business of losing money. So in every region, whether it's a suburb or a section of a suburb, there's a certain limit that the bank says beyond this they are not willing to lend any more money. Once they reach that point, they feel overexposed and they will not finance any more bonds beyond that. If your bond gets declined because of this, your best bet is to take the same application and just apply with a different bank, and hopefully they will be less exposed in the region you want to buy. I'll catch you in the next video.